No, we're not surprised. We know financial crises recur every decade or so, so we plan for them. On the operations side, we deal only with systemic financial institutions or important institutions. These are the companies and banks deemed too big to fail by the government, so we don't lose too much sleep over them. We know our money is in good hands. In terms of investment, we look very closely at the health of financial institutions, uh, and so we place shorts when we see frail situations, and that protects our portfolio. In fact, in this case, out of the three US banks that recently failed, we were short two of them. We don't think so. Inflation is still very high and will require higher interest rates so that central banks can hit their inflation targets. Um, this at a time where there's a lot of players still with a high amount of leverage. And so there's opportunities to short some of these players. An area where those opportunities have not been talked enough is, I believe, the European financial system. There's a lot of banks that wrote long-term fixed rate mortgages there. These are not mark to market. There's no secondary market for them. And so because of that, the accounting of these financial institutions does not reflect the economic reality of them. Some of them are undercapitalized and may even be insolvent. So we think there's still chapters ahead and we're preparing for it. Well, for Somar, this is an environment that opens opportunities. The opportunities on the short side are clear, and we talked about them. On the long side, there's also opportunities. Markets sell off. A lot of players have to sell equities just to raise liquidity. This brings good companies, great companies, to very attractive prices, and we'll look forward to taking advantage of those, just like we did in 2020. So we like the setup, and we feel confident we're going to have a very good year. Yeah, I think depositors will be protected. I think the governments and regulators will try to hold the line on solvent financial institutions and prevent them from liquidity problems to become a solvency issue. Um, I think surprises are going to arise on a daily basis with companies that we thought were strong not being able to survive. And I think some of those surprises will require the governments and regulators to change rules, to launch new additional emergency programs to combat them. Regarding the US, we feel relatively comfortable of the US ability and willingness to contain the financial crisis. We're a little bit more concerned in Europe, where the architecture leaves a little bit of unanswered questions. So you have a central bank that is not controlled by a single government, which means none of the governments print their own currency. There's tens of different governments with high levels of leverage, and it's very unclear how they will coordinate their response to save players that need to be saved and to resolve the failure of a big bank that may be insolvent. So all of this will require day-to-day close attention, something the Somar team loves and embraces, and we're ready for it. So on the weakness side, we think sectors that depend heavily on debt will be impacted. So we have home building, construction, auto, and any big ticket consumer purchases being impacted. We think lower ticket consumer purchases will somewhat decelerate but hold up. And that may create opportunities to invest as the stock market may oversell them. We pay attention to that. Uh, we believe the government will continue to spend heavily to hold the economy up. We know the investments that are going on in infrastructure. We know the investments that are going on in ships, manufacturing facilities. We know defense. And also, taking a step back, we follow on a micro level the great entrepreneurs that offer the best deals to their customers. I think they will benefit from that change, continue to take market share, and that's our bread and butter. And we're confident and happy to partner with them if the prices so warrant.